So a couple of years ago, I produced a video called the Property Tax Return 17 Tips You Should Know. And it's a long video. So what I want to do is produce a shorter video to help you save tax on your property tax returns. So let's go check out this one tip that I think is going to be useful for you. Now let's talk about property income. The more income you have, the more tax you pay. So it's really important to understand what your tax is and what your income is. And the one thing I would say to people is make sure that there's a couple of things here. Okay, I apologize in advance because I'm going to go on a rant. The property investments is a business. And if you are going to act professionally, if you are going to be taking advantage of your business to make as much wealth as possible, you've got to start looking at your financials on a monthly, if not quarterly basis. If you are trying to lose weight, you don't ignore the amount of calories you're consuming. You don't ignore the weighing scales. You are religiously looking at those things. So what about your property business? Now, if you're using tools, which I really appreciate using Xero. I know people like using QuickBooks as well. I'm not a fan of QuickBooks, I've got to be honest, compared to Xero. QuickBooks is very clunky, I've got to be honest with you. Xero is very streamlined. But ultimately, whichever software you decide to use, it will help you understand your income and costs. And it is a business, and therefore greater accuracy equals greater focus on profits. If you want to sweat your assets to generate as much income, then keeping an eye on all of your income, all of your costs, so that you know how much profit you're going to be making, I guarantee that you'll make more profit than those people who are just passive in regards to their investments. And there's a lot of people out there that just talk about, the great deal. And then the deal comes on the table, then they get their property under the belt, they tenant it, but then they don't look after the income, they don't look after the costs, and then they worry about, well, I'm not making much money from property, property's a bit of a scam. No, property is not a scam. Property is a great way of making money, but you have to take more responsibility of your finances. And using Xero and QuickBooks will help you do that. Okay, rant over. Let's move on. So the thing about the income, you can use something called the cash basis. Now, the cash basis says you will only pay tax on the money you actually receive. Now, there are some systems out there that will base the financials on accruals basis. So you could say, especially in QuickBooks or Xero, that it will say, right, okay, put the AST on the system, and it will correctly, by the way, put your rental income for 12 months in the system, which, for all accounts, you may not have received that money. So from a tax perspective, the accruals basis where it's automatically doing this for you isn't so great, because now you're paying tax on money you have not received. And it is totally possible that you, as a taxpayer, have paid tax on income you may never receive. So really, you've got to be on top of your finances. So how much tax have you paid on your income that you've not received? Maybe some suggestions in the comments box would be really useful. People that are doing property and they've got the first property, they may be in that transition year whereby they haven't got all of the property income for that property. They may have only owned it for 2-3 months. If that's the case, then the gross income on that property may be less than £1,000, especially if it's owned between husband and wife civil partners. Then ultimately you could have £2,000 worth of property income, gross by the way, that does not have to go on your tax return. Well, it needs to go on your tax return, but you get this property income allowance, which basically means you put that number in, it's acting as cost, therefore you don't have to pay tax on it, and you don't then have to put all the other costs in it either. How many people look at these notes when they're doing the tax return, especially when they're doing the tax return on the 31st of January? Are you getting embarrassed here? Are you feeling warm around the collar? 31st of January, 8 o'clock at night. Oh, I've got to get my tax return in. I ain't got time to look at these notes. Oh, I've paid my old tax and I should have done. Mistake, right? So the thing is about tax returns, and this is probably tax tip number 20 by the time I finish this, is focus on your tax return nice and early, because it'll be fresh in your minds. If you do your tax return in April, May, June, as opposed to January the 31st at 8 o'clock at night, you will remember a lot more about the property journey, which was now, well, let's be fair, 8 months ago. So you really got to get on top of your numbers. And if you've got less than 1,000, make sure you read these notes. Make sure you don't pay tax on this gross income of £1,000 or less. All right, so I hope that one property tax return tip can help you save money. But what about the other tax tips, the 16 that we have mentioned in the other long video? Are you going to watch that? Well, I think that's a great idea. So there is a link in the video description box below, but I'll also be putting it just above my head right now.